end of that music and all those legal words means we are ready for a Theta Thursday edition of the halftime report. Of course, market bulls are like, Theta, this in a multi-week ramp up. They're like, you Theta traders, you're cute. You're cute. But I'm joined today as Matt is continuing to put the finish touches on the day trading system. And we are going to have a special webinar on June 19th, 8:30 p.m. to party to celebrate the release of our new day trading system. We're sending emails about it. We're talking about it. Sign up for it. It's going to be a great event. It's going to be a great event as we release that system, and we have our holiday sales. But party, Greg, is certainly the feeling of the market right now, isn't it? And I'm joined by Coach Greg. Greg, you know, you and I are the most macro bearish people at tackle trading. You know, and so I guess it is our punishment to be joined together on this macro wrap up. How are you doing today, Greg?
I'm doing good. I can feel Matt's hands ringing right now with the two tackle bears running the show here, running amok as the case may be. Yeah, it's a party, man. It's a party, and it just doesn't seem to stop. You know, it reminds me of Las Vegas, man. The lights are always on, and it just keeps on going and going and going. But also, like Las Vegas, there's always that hangover eventually, and that's kind of how I'm looking at it right now. Is, hey, party until it's over, but when it's over, it's gonna be over. At least that's the way I feel about it.
You know, and you know, it's like, it's funny when I knew you were joining me on the show. I was just like, maybe someone that's more, you know, crabby bear than me. I hate ramp ups. I hate ramp ups. I always have, even when I'm just a primary bull. But we got a lot going on, a lot to break down in the market. You know, let's start with Forex Factory, Greg. We had a lot of economic data released today. And, you know, when you look at this week was a really big event week. You know, we had CPI numbers, we had PPI numbers, we had the Fed yesterday, we had the European Union, the ECB, come out today, and then you had a slew of economic data. And retail sales came in strong, but what a lot of the market seems to be queuing on from a price perspective, because if you'd have told me Thursday retail's come in strong, I would have thought cyclicals are going to lead, right? Showing a strong economy. But it really seems to be queuing off the unemployment claims number, which was higher than expected, matching last week's number. And that is impacting a lot of the price action in bonds, in gold, and even in the, hey, let's pump tech because higher unemployment claims means less people have jobs, which means the Fed will cut one day and the economy. It seems like that is the number that, you know, the traders and the algos, I should say, are keying off of. You know, it's been a big week, Greg. What do you make when we're basically at the end of this big data dump? What do you make out of all of the economic and inflationary data that's come up this week and the Fed meeting and all that?
Yeah, like from a macro perspective, you know, it's the data, you know, you can see all the red here, right? So, you know, we had the CPI, the PPI, you know, all these kinds of things. We've had a bunch of things, you know, if you think about it, the red numbers are misses, right? They're not what was expected, right? And yet it doesn't seem to matter. The market says we don't care. You know, unemployment claims, you know, higher than they expect, considerably higher than they expected.
I mean, these numbers, 262 claims, is, you know, matching last week, which is about as high as we've been in years.
Yeah. Yeah, and it just doesn't, you know, the market just says, you know what, whatever, you know, it's all good. The Fed paused. I think that on Wednesday had a big effect, right? So if you're watching the markets at that point in time, you know, there's a bit of a rundown and then a pop back up and then it kind of settled in a little bit. And then even today, you know, early markets today, they were down before market opening and then they've just blasted off again. It just seems that, you know, the party's still going. We just talked about it. The party's still going. Everybody's still plowing into tech. My question is there a little bit of FOMO going on?
Oh, I think
The
there is a lot of FOMO going on,
I
right?
think so as well. Like I remember when Nvidia came out with their earnings, right? Their earnings were good, and their projections and the talk about the AI, you know what I mean? But there was some talk in there, right? And I don't know if everybody got the same thing that I did, but they were like, yeah, the AI, we're really killing it, but it's probably about a decade out from where we are now. You know what I mean? And so for me, I was like, oh, okay. I thought there was something, brand new that was really sparking this movement. It didn't seem to be the case, but maybe there's things that I missed. Anyway, it seems that party is going. It's dragging everything with it. Like even the Russell 2000 was down a couple of weeks ago, and it was lagging way, way, way behind, as well as industrials. Like the Dow was lagging behind the tech and the S&P, and all of a sudden that popped up as well. That caught up very quickly as well. So it just seems to be, the flow seems to be going in one direction, and it's irrespective of anything else that we're seeing. When you look at a bigger picture, economically speaking, it doesn't seem to even play. It doesn't even seem to factor in right now to the movements of the market. There's only a couple of scenarios that I can see happening. We run out of steam at some point in time, right? A rocket ship can't keep going up forever. It runs out of steam and it rolls over. Or what happens is it starts to trim sideways, chills out for a little bit, and then takes another leg up. Both of those scenarios are very possible. At this point in time, I'm kind of leaning to the sideways as opposed to the rollover, just with the euphoria that seems to be in the market right now. So
Yeah.
that's my
Let's
take
go.
on it.
Yeah, let's go break down the technicals. I want to key on that unemployment claims, and I want to start. Could you give me like a 1 minute or a 5 minute chart, and give me gold, and why I say that the market is keying off, and this will play into in a lot of other analysis, is that you see European Union came out last night. Well, last night for us, and we're basically higher for longer. We're not thinking of a pause. Inflation is, they raised their inflation expectations and basically said, we have to. Inflation's not going away. It's not gone away. It's not disappeared. What are you talking about? We have to keep raising, keep raising, keep raising, right? The Fed was more, oh, kind of like play in the middle yesterday, more of that. And you saw gold sell off on, kind of that. But then those jobless claims came in. And once again, near those couple year highs. And ever since that jobless claim number, you've seen gold just, basically play off that, right? Higher unemployment means less interest rates, playing off that. Will you give me TNX now? Give me TNX, and this is the yield. And we saw the same thing happening, right there at when the unemployment was released. Then sliding down a little bit after that. Now give me tech, right? Because in a day, once again, where in a day where you had retail sales come in strong, it's been ramping ever since that initial number, right? That initial number. And now give me a daily chart and give me NQ. You know, give me the NASDAQ futures. I mean, this has been an insane month-long run, right? Just powerful, strong. Anybody that was short has felt the pain, right? And you alluded to that FOMO being created out there in the marketplace, right? The FOMO. What do you do with a chart setup like this, where it is plays on all of the emotions, right? All of the emotions, all of the fear of missing out. Greed indexes are at the highest they've been in a long time, right? What do you personally do as a trader when you get into these parabolic extended situations?
Yeah, so like I always say, you'll notice on the bottom here, I have the RSI on my chart all the time. The RSI is one of my favorite indicators to tell me when things are overbought, oversold. And that's really, there are other uses for it, but that's mainly the one that I use. This is clearly overbought. Okay. That's not to say just because you get an overbought condition that it can't stay that high or even continue further. But when I see something that's overbought, I need to reset how I'm looking at things. And in this case, this breakout 4 days ago on tech again, after another breakout, just recently, this breakout, I in all good conscience couldn't just enter a long trade and chase it because it doesn't compute with me. So if I'm going to play this, I can only do this a few ways. Number one, I sit back and I wait. Okay. Maybe I wait for a pullback to the 9 or a pullback to this support level there. That would be the best case scenario as far as I'm concerned. Or I've got to get into this in a way that I'm not gonna bet the farm, right? Put all my chips in the middle to say that this thing continues, because it doesn't. Again, you can only stretch a rubber band so far, and clearly this is getting a little bit stretched as evidenced by the RSI here. So one of the ways that I like to do this is if I can put on a trade that is very, very low risk, right? A fixed low risk. I don't mind trying to catch some of this FOMO, so to speak. But I'm not going to go out and buy a long call, even if I went to the QQQs, right? So we go to the ETF here, okay? Go to the ETF here. If I was going to try and catch some of this move, if I go to the trade tab here, I'm only going to go out, I'm going to go out short term here. I'm going to go to the July expirations and buy an at the money call option. At the money call option is going to cost me $900 for one. I don't want that kind of risk. I don't want that, because when you have an overbought condition like this, it can roll over in a moment's notice. Look at the weekly chart. This is crazy. It can roll over in a moment's notice. Instead, if I'm getting involved with something like this, if I want to play it, to the bullish direction, which is the only way you can play it, right? I'd have to set up
Yeah,
something like
because
a
just because something has an overextended RSI, I mean, you don't try to get in the way of a freight train,
no.
right?
It's like we talked pre-production, right? It's like those kids in Stand By Me walking around walking down the railroad tracks. Everything seems to be fine. Next thing you know, a freight train shows up. But if you wanted to get involved with something like this, as long as you can do a fixed risk trade, like a ratio spread, or my personal favorite, a butterfly, like a broken wing butterfly, something like that, you can do an out of the money broken wing butterfly for very, very little money. And you have a fixed risk on that trade. If you want to participate in something like that, that's the way I would do it. I have no interest in going out and putting out, $900 a contract in the case of the Qs here, or something like that. When I see 1, 2, 3, 4, 5, 6 bars in a row, with no downside, even the down days were dojis, right? At least back here you had a little bit of a rollover, something. This is just up, up, and up. And you look at that and you go, okay, things can go parabolic. I've seen it hundreds of times in my trading career. I don't want to just grab on and see what happens. If I'm going to get involved with something like this, it has to be a fixed risk trade, and it has to be, for me, it's got to be low risk. I could build out a butterfly trade here that's going to cost way, way less than $900, and then worst case scenario, rolls over, I lose it, so be it. I took a shot. I got my FOMO fix, but I didn't bet the farm. I think
Yeah,
that's the only way you can play something like this.
and this is where I have found myself as a bearish heart, but recognizing chart, right? Recognizing chart is that it's like, all right, I'm willing to get bearish, I mean, not bearish, bullish plays on, but I got to have a technical pattern too, right? I got to have an ideal situation. I got to have something that gives me a technical edge, right? You know, and
Exactly.
and and I think that's what it comes down to, and this is where trading experience becomes so valuable, right? Is that you don't just chase, you wait, and then when the pattern hits it, well, then you hit it. Now you might hit it conservatively with bullish credit play, you might go a directional play, but this is where technical analysis comes into play. This is where experience comes into play. It's like, all right, recognize everybody knows bulls are in control right now, right? They're in control right now, you know, but bulls Greg, don't do very well when things get wild and crazy extended, right? There is usually a pause, like we saw a couple weeks ago in the NASDAQ. Took what, 7, 8 trading sessions off. We're like, all right, got a little too crazy there. That's just the norm in good technical patterns, isn't it?
Absolutely. It's again, I kind of equate moves to rocket ships, right? Like when something's just going up, up and up, sure, how much fuel does it have, right? How much energy does it have? It's got some. Clearly, it's got a fair bit here, but at some point in time, that energy has to end. And you either got to take a breather or you got to turn over. It's the only two things that can happen, right? And so in this particular case, we're seeing a lot of energy being used up here. Now the question is, and I like the way you said it, are we going to be patient? We're going to sit there, wait for a new technical pattern to develop and then get involved. I think that's the smartest idea. But if you got that FOMO, you know what I mean? As I was saying, if you got that FOMO and you got to be a participant in it, do yourself a favor and get involved with a very, very, very low risk play. Do yourself a favor, because I'll tell you something, I speak from experience, trying to play the FOMO game, a lot of the time it works out very, very poorly. Right. So I think if you're going to do this, we talk about this all the time in our scouting reports every week, right? We talk about, okay, what's the secondary pattern? Has it formed yet? One of our favorite trades is it needs a doji. You know what I mean? Like that. I can't remember the amount of times that we've said, look at this chart. It needs a doji and it's amazing, right? That's kind of what we're looking for here. I'm looking for, because I don't know. Maybe tech continues on its merry way, right? I don't know that it's going to roll, or I don't know that the index are going to roll over. But if it pulls back to, like I said, a 9 EMA here, or this support level here, I'd be more than happy to get involved there, where you could do maybe a little bit more aggressive trade. I don't think you can do that right now unless you're really good at setting up fixed risk kind of setups.
Yeah.
And that's kind of how I view not only tech, but the S&P 500 as well. A lot of the areas of the market are very overstretched. And if you're going to get involved, like you said, just make sure that you're not going to lose it all if it rolls over.
Give me SMH, semiconductors, which have been just on fire, along with many other things. It's the same principle, right? It's
Yeah.
the same principle. Semiconductors are an area that I've been playing, a area I continue to play, but it's about like it's about waiting for great opportunities, not just average opportunities.
Yeah.
Especially when things get stretched, right? Especially when things get stretched.
Well, if you want an example here, right? If you want an example of FOMO, if you will, and kind of a little bit of a theme today, right? I'm gonna get my box tool out here. Give me a second. Let's look at this, okay? Let's look at the last, oh, I don't know, what was that, since January, basically?
Mm-hmm.
So last 4 or 5 months here, semiconductors did absolutely nothing. Now look at the personality of the stock. It's completely changed. Okay. So that tells me that the participants in here are not the same participants here, or at least they don't have the same view of things. Okay. This is getting a little wild and crazy. You know what I mean? Gaps up day after day. You know what I mean? Little pause and another pop here. This is a different uh, perspective on the market. Okay, this to me is very sustainable. Consolidation, for those who are unaware, consolidation is the biggest period of movement in any market. In any market, we have more consolidation typically than we have trending, and it doesn't matter what market it is if you look at it from a big enough time frame. Perspective here has definitely changed, and it's great if you're on board with this. As you said, you're playing it. I mean, you can get some nice gains here, but understand that it's sometime in the future, I don't know when, it's going to end up back like this box again. Okay, so just be prepared that this perspective is not going to last forever, and this is even more wild than the perspective back here. Right, this perspective here was pretty orderly. This here is not orderly at all. This is something completely different, and this typically doesn't last forever.
Yeah, no, and it just goes to strategy selection, right? Like, when I like
100%.
talking to Matt yesterday. It's like, um, oh, my sound is a little low. I apologize.
I had the wrong mic. I apologize. I'm an idiot. I'm an idiot. I'm an idiot. I'm an idiot. So thanks for pointing that out on my mic. Does this sound better now?
Sounds amazing. Yep.
Sorry about that. Sorry about that. But, you know, it comes down to strategy selection. You know, when you get into RSI situations where you're extended, I have a really almost impossible time, Greg, doing directional trades, right? Like to doing aggressive trades. Credit can still play, especially naked puts, ball put spreads, you know, or, you know, things where you talk, you know, some maybe more creative plays, right? More creative plays that fix risk, all that. But it's just like, you know, chasing the dragon, so to speak, right? You know, I think it comes down like, you know, when you get a great setup, chasing the dragon, when you get like the situation for you, chasing the dragon can be very profitable. But you know, strategy selection, right? I mean, because I think you and I may be on the same end. We do not expect the NASDAQ to just come tumbling it down in the next couple months, right? Might consolidate though. Feels like it's long overdue for a longer consolidation. And credit certainly plays in that situation, right? In that situation, kind of like when it consolidated in March and April and into May, right? Good 6-7 week. Credit certainly played. Credit certainly played in that time period. Feels like it's just overdue for that kind of, not go down necessarily. Let's just hang out and stop going parabolic. But markets have a temperature of their own. Give me small caps. Give me an IWM. This has been one of those type of trades that has caught probably more attention, not just here at Tackle Trading, lots and lots and lots and lots of other places as well. Like I see small caps talked about more as a potential catch-up trade than I have seen them discussed in a long time. Right? Long time. A lot of call options being bought. And had that little ramp up, right? Little ramp up. And I think it's done traders a favor here, Greg, by just hanging out for the last 6-7 sessions and not having too insane of a move. What do you think about the technical situation and ways to play it, triggers? Just talk about small caps for a minute.
Yeah, it definitely was a catch-up trade. It was way behind. The Dow was a little bit behind as well, the other two markets there. And again, I this is why I have RSI on my chart here, right? You know, this isn't even overbought yet. So this did catch up a little bit, but it's still got room to run over here. So I think there's opportunities here. A little nod to Coach Tyler. I think this is his favorite area of the market. But I still think there's room to run. You can see from a technical perspective here, there's definitely more space to the upside here. But what's good about this is these other moving averages are starting to catch up. So they got all wound together here, and then there was a blast off, right? You can literally see how that happened there. Well, now it's getting this little sideways direction, a little bit of a range here, and now all these moving averages are working to catch up again. So maybe they get a little bit closer together, they get enough energy, and then you get a pop to the upside. I think the only real way to play this is to wait for the breakout to the top side.
So at this point, wait for the breakout.
Well, this range is too tight, right? So 184.5 to 188.5, that's a $4 range. It's a $3.45 ATR on a daily one. So could you make a trade here if you caught it on the low and ran it to the top and still got a 1-to-1? Yeah, you could. But I think that's a tall ask, right? For me, I'm more than willing to sit here, you know, wait for this box to finish what it's got to do there, and then pop to the upside and take advantage of that. I think that's the best way to play this myself. Like I said, if you're an intraday trader, much like our course that's coming out, you know, could you find some spots intraday, go to a lower time frame and find an opportunity to get in here? Absolutely, I think you could do that if you have those skills to do that. If you don't have those skills to do that, then I suggest you come to our webinar.
That is a nice little support level that has came down multiple times.
Yep.
And what have traders done? Algos, day traders, other traders. They
Bought.
bought. And that is now the 5th time at that level. That makes that even more appealing to me. That
Certainly
is,
does.
I mean, this is the power of intraday analysis, right? I hadn't even noticed that on IWM.
Yeah.
I am so glad you brought it up. This is the power of intraday analysis. For example, I have covered call expiring on a small cap instrument tomorrow, right?
Yep.
You know, right now it's out of the money. That makes me want to be uncovered at the end of the weekend, right? It's those little things. And we've been talking about this concept this week, Greg, about day trading, which is as much about intraday analysis, this course that Matt has designed and created, as anything else. It's like these type of cues. I see that. I learn and become a master at intraday analysis. Even if I'm not day trading, it helps with my tactical decisions and other things. I see that support level and I'm like, I'm not covering until that breaks or until I get a ramp up and I get a huge credit, right? That's supportive of price action. You know, do you do those kind of little things when you're looking at things to make those type of decisions?
Absolutely. I think this is, if you want to take your trading to the next level, I think you have to use this as a skill. So I do day trading, I do swing trading, I do position trading, I do invest, I do all those things, right? I think the best leap forward I made in my trading, okay, because I started out as an investor first, like most people. I then got into position trading, you know, longer term holds, right? And then I got into swing trading. When I got into swing trading, I never looked at intraday charts. I never even, you know, I looked at a daily chart. I looked at the weekly chart for a trend. I went, okay, I'm good to go. I put my money to work and see what happens. The biggest leap I made in my trading was when I was able to start to look at intraday timeframes and figure out the flow of the price before it got to my entry. So if I had an entry on the daily and I was able to look at a 1 hour chart or 30-minute chart or 15-minute chart, whichever one you find most comfortable, when I'm able to look at that and I see, wow, look at this major resistance back here, became amazing support here, still holding up as support, right? I get to see the flow of this even before it gets to my entry, right? My entry on the daily chart. So this became a really like a big leap forward in my success of trading, is to learn how to use this effectively. And so, yeah, I do this. I literally, I can't think of when I don't use these intraday charts just for more clues of what I expect to happen with the longer time frames, with the daily, with the weekly, whatever it is. I can look at the lower time frames, and then you can reverse that, right? When you're looking for trend analysis, right? You want to look at, you know, maybe you start with the monthly. Okay, what's this chart doing monthly? Well, it's bullish. Okay, let's drill down to the weekly. Okay, it's less bullish, but still bullish on the weekly. Oh, what's it doing on the daily? Well, it's neutral on the daily. You can start to see how all this flows together. And when you really master these skills, okay, that's, at least for me, that's when my trading took a really big leap forward. So yeah, intraday analysis is paramount. And like I said, it looks so clean here. You know,
It just looks clean. That's a great word. It looks clean.
You were almost shocked by the way it looks here. And
I because it was like striking how clean, how many tests. Well, and not just test on one day, test on 4 or 5 different days at the same level, right?
Well, the funny thing is you all watched me. I drew this line here and I drew this line here before I looked at the 30-minute. And then I go to the 30-minute and lo and behold, it's almost perfect to the support and resistance is happening inside this, right? This is what intraday analysis can show us. You know, I might not want to get in, or I might not want to wait until 189 here. I might want to get in when it breaks above this high here. I might want to get involved with this here. Well, I could never look at the daily chart and make a decision like that. It wouldn't make any sense to do so. But when you start to drill into and get better at looking at those intraday charts, it just opens up a whole new set of entries, a whole new set of exits. You know, a way to, we're big fans of legging into trades. Well, legging in on a daily chart, it has its merits. But when you start legging in on an hourly or 30-minute chart or 15-minute chart, that's when things get very exciting, as far as I'm concerned. It gets you in that trade early. It also gives you a heads up if there's trouble coming, right? If we lose this level here, right? If we lose this 184.5, well, geez, I think we're going down to 182 pretty quickly, and then potentially 180 below that. So, the market's going to give you clues if you're just willing to follow them.
Yeah, that's a good clue. And we go back to the daily chart because just want to mention RSI again, because RSI is never a decision maker for me, but it is a keep aware for me. And this is a good illustration. We've seen small caps on 2 occasions get into overbought conditions, right? One of them led to a quick reversal, and one of them led to a meandering nothing, right? I think it's really important to keep just it like it is a consideration for me in doing things. I don't have any hard, fast, I gotta or not do anything on RSI, but it is a consideration for me. And so I think that's an excellent point, that we're not in overbought conditions, right?
That's right.
We're not
Unlike the rest of the market, right?
Yeah, I
Like
mean, go to
if
the
you're
S&P. Go to the S&P right now.
yeah, if you're looking for, looking at other areas of the markets, it's well into overbought territory, right? This is the SPY here. If I get it to pull up here, it's well into the overbought territory, like more so than it's been in the last year, right? For the first time in the last year, or second time, sorry, in last year, it's well overbought there. So that makes a big difference to me. I could still get on board with a trade in IWM. In the SPY here, I don't know. I'm not chasing that, man. I'm not chasing that dragon. That just seems like a bad idea to me.
It seems like that you're threading a needle. And I want to retire. I don't want to thread the needle. I want easy things. I want really things that are easy. And so it just forces me right now in a lot of equities that when I get involved to be credit oriented, if I want to get involved at all on that. So appreciate your insight on that. I love that IWM support level. That will lead me to do little tactical things tomorrow when covered calls expire. And maybe those tactical things are, maybe I'll cover next week.
Take a look at it on Tuesday. No.
Give me a couple other charts, then we're going to head into give me RSP. Like one of the things, and I've talked about this for a couple of weeks, talked about it in the podcast a couple of weeks ago when Matt and I promoted this catch up everything trade. And RSP is an equal weighted index where all 500 stocks are the same. What do you think from a technical? We're not in overbought conditions here yet, right? Getting there. Getting there. What do you think from a technical perspective?
Great question. I think it can get up a little bit higher. Like you said, you're not overbought yet. This has been a solid move. Have we had anything like that before? A little bit there, a little bit there. So I think you can get up to this 150 range, and it would make a lot of sense, right? You'd have a big round number there. Don't seem too stretched. It's been more stretched before, right? I'm looking at these moving averages here, so it doesn't look that stretched. Yeah, I think there's still room here. Obviously it has a personality of sometimes it goes sideways. I could see a little bit of that here. Yeah, your next resistance is a very big one. The 150 is definitely your next resistance there. I don't see any reason why you can't keep going. Got a decent volume, picking up some volume here recently as well. Yeah, my technical read on this is, I don't know that I want to jump in right now, but I would definitely pay attention to that at 150 because I just don't think there's enough room here. 148. Yeah, so you don't even have 1-to-1 if you jump in here. But I'd pay attention at 150, maybe play for a pullback here or play for the breakout above 150. Breakout above 150 looks very attractive here, 153, 155 area there. So, yeah, again, I don't know that it's going to stop right now. You usually want something to kind of get in its way. And I think that 150 is going to be the block, if you will.
Give me XLI before we head into commodities. And this fell, and I missed this. I talked about it earlier this week. I missed the trade itself, which has happened to me only about 4 million times in my trading life, right? Somehow I'm like, how have you ever made money when you've missed so many trades? But you learn to accept that, right? Yeah. In the catch everything else, right? I mean, this is a really nice breakout of a 6-month consolidation pattern, right? Yeah. XLI has been one of those cyclical favorites You've seen energy sell off big. You've seen financial sell off big. You've seen material sell off big. XLI's never wanted to sell off big, not once, not in even all the crabbiness of cyclicals. It's just very much just hung in a range. And now you're breaking out of a 6-month consolidation pattern, which means you're not late, right?
Yep.
You just want to find great entries, right?
Yeah.
You want to find great entries. So what do you think about like this type of breakout? Like, and take XLI out of it, just a 6-month breakout. You miss the initial break. What are you looking for on secondary patterns?
Well, so I actually had one of my mentors many years ago. He kind of taught me, and again, not always, but a lot of the time, the first breakout's great if you can catch it, okay? But the pullback, the subsequent pullback, and then the blast off, usually if it's quality, right? If it's got some legs, it's going to be much more beneficial and much more exciting. So, we call it the 1, 2, 3 pattern here, right? So you got this breakout, that's our 1. We look for our 2 to pull back to a level of support. Okay, could be the 9, could be this whole level of support. And then you get that third move, that 3 move there. This move, and again, there's nothing always in trading, but a lot of the time this number 3 move is much more beneficial than even that first initial move. I think when you miss something like this, and I'm not just talking about XLI, just in general, if you missed there's an old Wall Street saying, it was taught to me many years ago, miss the pop, wait for the drop, right? And that's what you're doing here. You miss the pop, you wait for the drop, and then you catch the next wave, right? It's like a surfer, you're out in the waves. Maybe you miss a wave or two, as you just said, maybe you miss some trades once in a while. Believe me, there'll be another opportunity coming along. And for me, XLI is now on my radar because I also missed this trade, but I'm more than happy to get involved with this thing if it touches 103 again. So, I could put an alert here. I can put this on a watch list. I can pay attention for this third wave move, because this third wave, I'm telling you, a lot of the times it pulls back, builds up a lot more energy. These moving averages catch up, and then boom, you get that really nice blast off there. And as far as I'm concerned, this third wave is a more there's a higher probability of this being good than this initial blast off, right? Because sometimes you get these fake outs. Now this was 3 candles, no fake out there, but
Yeah, it does. It feels like it feels like the market would have to collapse for this to not work out, right? Which always made it. And if you have to preface a chart setup with the market would have to collapse for this to not work out, probably should go on a watch list immediately, right? Because the market most of the time does not collapse, right? Most of the time doesn't collapse. So just want to put that on radar. I've been talking about it this week. Appreciate your insight. All right, let's go. Give me a dollar index, UUP, DXY, whatever you like to use. Some interesting stuff going on commodities. First of all, we got the dollar down, right? The ECB was it reminded me of Jackson Hole in August of 2022 when Grandpa Powell came out and yelled at the market. And that's not the Powell we had yesterday. We had a very him and haw. Hey, maybe we'll, just very light. But back in August, he came out and just like, we're going to raise hell and fire. That's what the ECB felt like to me yesterday, that we are going to raise interest rates and we're going to keep raising them. And then we're not going to pause. We're not even thinking about pausing. And then we're going to raise some interest rates some more because we're going to beat inflation. It was very much a hellfire. And if you give me the euro dollar cross pair, I think it's yeah, there we go. All right. Well, guess what? I think that analysis was enjoyed and thought by lots of other people as well, right? Like, all right, you got one central bank that kind of hemmed and hawed this week in the United States, and you had another central bank that said, hell no, we are raising, right? And you're seeing that in the commodity. And so we're seeing, go back to the dollar, we're seeing, the euro make a really strong move on, the nice thing about commodities and currencies, Greg, is some of the silliness that goes on in equities. it's much more macro oriented and makes sense to a logical mind in these things. I mean, this makes perfect sense to me. One central bank crazy, the other not. Seeing some decline in the dollar here. Now let's go over to gold here, because this is the interesting thing on gold. You and I, along with many people at Tackle Trading, love gold, like gold. I was going to be surprised if it stayed in this trading range this week. And it looks like I'm going to be surprised, Greg, because we for whatever reason, we just don't want to give out. What do you make of the technical pattern? Talk about gold. I know gold is something that you spend as much time thinking about as anything else.
Yeah, it's a big part of my life, this this shiny yellow metal. Yeah, I was actually expecting a drop as well. I was expecting a little bit more here, but I think this kind of feeds into the thing that, you know what, with the inflation talk, with the macro picture, you know, we talked about this right at the start of the show. The macroeconomic picture and the things that we're facing, higher interest rates, you know, I wouldn't call it runaway inflation, but increasing inflation, you know, supply chain challenges. There's a lot of things that are happening around the globe right now that I think has some of the markets, or at least a part of the markets, still a little spooked. You know what I mean? Still a little bit like, yeah, you know what? We're pretty happy to see tech going to the moon, but you know, I don't know how all this plays out, right? I think that's been saving gold from a bigger decline. Honestly, that's the only kind of thing that I can that you know, from a sentimental / fundamental reasoning, it's the only thing that I can kind of think of. Okay, why is this holding up so well? You know, because honestly, gold in itself, it tends to run a bit. It's usually more of a trender and less of a sideways type of thing. This is holding up very, very well in the face of, you know, the recent runs we had. That's the only kind of thing that I can think of in the back of my mind. Is there's still something in the back of everybody's mind. Like I said, despite all the bullish runs, they're still maybe a little bit concerned. And I think that's why this is holding up as well as it is. Like I said, I actually expected a little bit of a bigger breakdown here. There's a few things I watched, like the bullish percent gold miners index chart. You know, it wasn't quite to the oversold area there for gold. So I thought there was more room that it could have dropped. It still could, obviously, but it's just been holding up so well. They've tried to push it down. They've tried to push it up. It just seems to be sitting in that range. And honestly, I don't know the catalyst that's going to change it right now. You know what I mean? I just don't.
Well,
like, yes.
I think, I mean, go back to the euro dollar cross pair. I think when you analyze the absolute, whatever Powell was, it wasn't dovish, it wasn't hawkish, it was, I'm just going to play it. And the hellfire speech, I think we're going to see the euro make a move here. And I think because they're resolute. Mm-hmm. And that's going to send the dollar down, which at least you would think if the dollar goes down, that provides additional stability for gold, right? It might not serve as the skyrocket with, you know, still inflation, all of that. But if the euro keeps pounding the dollar, it's hard to see gold break its support, I guess, is my initial thought. If the dollar just keeps on sliding. Now, can it act as enough of a spur to send gold out of that resistance? Do you just play this technical at this point for short-term decisions? For
short-term decisions, 100%. I think you have to. And again, I kind of like I like these sideways chops here, right? You know, if you wanted to give me my ideal scenario here, is this 9, the 20, and the 50 all catch up to one another, and you know, really tighten up, you know, so another maybe week or two sideways here. I think that'd be fantastic, because this thing's going to go one way or the other. It's either going to blast off the top of that point or it's going to fall off the bottom. I think either way you could play this here. Above 2000, I love it. Below, you know, 1940, you know what? I'm okay shorting it too for a short-term trade, obviously, right? So I think you play this technically, but let's go back to the Euro USD there. You want to talk about playing something technically. Look at this rounding bottom here.
Yeah, no, listen, this I got to go find me a Euro ETF I can do something on, because I
they got micro contracts for the futures there, big guy.
like,
So.
you know, so when I sit back this weekend, which I always do, and analyze the week that was, I think the most striking macro storyline was the Euros. I mean, because it was a hellfire speech. It was no, we're raising. We're not thinking about pausing. We're going to raise some more. We're going to raise our inflation expectations. And it was Jackson Hole from Powell last year. And that type of move, can really move a currency, right? It really can move a currency. And the last time we saw a big move in the euro was back in November, right? When you're coming off reversal analysis, right? And it kept on moving. This is the most interesting out of all the macro storylines, the most interesting story to me this week.
Even if you were just playing this technically, though, look at this rounding bottom and a break above that 50. Had you put that order in beforehand, you'd have been very, very happy. Even if you weren't even looking at the macros of it. When you get something that rolls down like this, I love these rounding bottoms, man. This is telling you that there's a big battle going on between the sellers and the buyers, right? And as it makes that turn, you can see that the buyers are slowly taking control. So like I said, even if you were just looking at this and hopefully you're taking into consideration the macros that you just discussed, even a technical trader here, this is a perfect breakout. Just a beautiful, beautiful setup here.
All right. Well, Matt's not here. I can talk about whatever I want. Give me wheat, WEAT. Never brought up in the halftime report. Ever. But listen, you've had I'm a moth to a flame on commodities that have been oversold. You have Putin out there talking about maybe breaking the grain deal. And you got a pretty technical pattern developing here, right? So once again, take the macro side off. Just talk to me about the technical perspective here.
Yeah, so you can see these two lines that I draw. This is the falling trend line, okay? So if you're going to talk about reversal characteristics, the first thing any reversal needs is it has to break the pattern that it's been in. Well, the pattern here has definitely been lower. This just happened here today, right? It just broke this falling trend line. Now, maybe my line's not perfect, but it's close enough. Okay, so that's number one. Number two, you've got to start breaking these moving averages, right? Well, guess what? We broke these moving averages, got above the 50, got above this falling trend line. There's 2 points that you just made, and you've got some higher lows here as well and some higher highs. You've got everything you want here for a really, really great reversal. And then let's talk about commodities in general, because you and I are big commodity guys, okay? Commodities in general, this is just generally speaking, they're very boom and bust. Well, this thing's been bust since October of last year. That's a long time to be down, right? That's a long time to be down.
It's a big percentage move. And whenever you have big percentage moves, it's not that it can't go lower, but people that have expertise and experience in commodities start getting interested.
That's right. And the odds, when you get this big of a beat down, you're right. It's not that it can't go lower, but the odds favor the upside. They just risk reward.
And it is one of the big differences between commodities and your average stock. Your average stock can just keep falling and falling and falling.
That's right.
Commodities tend to find bottoms in these situations.
Yeah. Natural gas, I think, is the best example of that.
Well, right? We're gonna actually go talk about natural gas here in a second.
That thing gets beat up, like just horribly taken out to the woodshed. Then all of a sudden it magically flies to the moon. So it's not for the faint of heart, that one. But that's the way commodities work. They're very boom and bust. And if you can catch those cycles, you can do pretty well for yourself.
Yeah, give me a crude oil. Crude oil has been a little bit of a wild child recently, but starting like this support level the longer it goes on, right? You know, and I haven't played crude oil very well, but I haven't had a lot of cooperation from crude oil this year,
Yeah.
Greg. You know, because we haven't had great technical patterns. We've had volatility, but at the end of it, here we are, and we're starting to see a support level get tested multiple times.
Yep.
And that is always telling, isn't it?
Yeah, the only concern, especially with crude oil, right, is if the economy slows down, right? It's the recessionary fears, I guess. You know, if the economy slows down, unfortunately, crude oil does typically take it on the chin. So, you know, you look at this just from a technical pattern. Yeah, it's finding a base. It's at least it seems to be finding a base around that 60, 67 area there, which would get you excited for a pop there. But again, this one here, much like all commodities, but especially oil, you do have to really take into consideration the macro, you know, events. And I think for me, I'm a little concerned about the upside to oil just because of those recessionary, the recessionary potential, if you will.
Yeah, I know you and I are on the same page, and this is probably one of the overhangs that I have it, because normally, if you and I are very bearish macro, right? Whatever that means for stocks, it means for stocks. Stocks trade in their own little fantasy world sometimes, but commodities, we don't have that luxury, right? And you and I both see a recession coming. We both see economic, and you know, it's taking forever to get here, but it seems like an eventual, like, just for me, I don't want to speak for you, you know, and I know other coaches and other people might disagree. It just feels like a foregone conclusion that you're going to have a recession at some point, which makes it hard to play. But technically, man, how much of that is already priced in? The Saudis cutting supply, US producers cutting supply, and a technical level. I mean, Greg, it's going to be hard for me to resist this if we're talking next week at this time and you still haven't broken that support level.
Yeah, and again, so that's when you have to look at it from a perspective, right? So, you know, yeah, we can say, yeah, we expect some recessionary, you know, pressures, things like that. You know, so we can have a longer term view and say, yeah, you know what, it might get beat up. But if I get a sweet technical pattern, you know, a falling wedge or some kind of technical pattern that I like, am I willing to take a nice little swing trade on this? You bet your bottom dollar I am. Am I willing
And
to?
especially in energy stocks,
Yeah.
right? Like if that support level holds and I get a signal in crude oil, well, equities want to party, right?
Yeah.
You could see energy stocks having a good little stretch.
Well, the other part of that is you could always, you know, if this holds, it doesn't have to go up necessarily because we could play this through a cash flow perspective. And I know you do this, and I do this a lot as well, Mark. You know, there's a lot of nice little cash flow vehicles when it comes to crude oil that you can play where you don't necessarily need it to go to the moon. If it wants to continue sideways and just holds the support, you can set up a decent trade there to start collecting some cash flow. And I know that's big on your plate and big on mine as well. So yeah, I'd love to see the support hold. And again, you know, my perspective long term doesn't necessarily dictate my trading short term, right? So you got to kind of keep those two things a little bit separate sometimes.
Give me natural gas. Give me natural gas. There's been a lot of natural gas movement around the world. It was only a matter of time before this started catching up in US. You've had European natural gas go parabolic this last week with lots of storylines impacting supply, like just a ton. You've had Asian natural gas. Natural gas is funny because you're like, well, is it natural gas? Natural gas? Well, it trades on different contracts, different things. Big, huge heat things facing that. You have had a multi-month consolidation. Greg, there are enough worldwide storylines on natural gas right now that are making headlines, Could you finally have a breakout here that sticks, right? Because natural gas traders, bottom feeders, they've been faked out in February. They were faked out in little move in May. This is a big move, right? This is a big move. And it is hard to trust anything in natural gas because it will mess with your emotions perhaps more than any other instrument out there. But just from a bottoming pattern perspective, doesn't look terrible, does it?
Well, so you'll notice, and it's just a little bit of history here. So this red line, so I haven't had, you'll notice when I draw a line, it's white. I haven't had my red line tool for many, many years. So this red line that I drew was way, way back here as a resistance line. Well, look what it's doing now, years later. You know what I mean? It's acting as resistance. Plus, you've got that 20 weekly period moving average here above 270. I love natural gas here, and we ain't that far away from it. So yeah, the bottoming is it's put in a bunch of like a shelf here, if you will. But now you're getting some higher lows here. You're getting some, a little bit of push. You're getting some. Let's look at the volume here. The volume's kind of flat, really. But yeah, I would look for a big volume day, and yeah, it sure seems to me that, again, this is the part of commodities. So I showed the big chart here. Let me bring up the 3-year weekly. So, this is a pretty big beatdown from 10 to 2. Okay, that's a pretty big beatdown.
It's as epic as you get in that amount of time in commodities.
That's right. So this thing has been beaten down. Well, natural gas isn't going out of business like a stock. Okay, it's a commodity. We use it. We use it a lot, as a matter of fact. At some point in time, it's going to have its day, because that's the way it works, right? The question is when. Well, that question has been really hard to answer for quite a while. At some point in time, it's going to blast off. So you have to treat this like anything else. You have to play the levels, right? The level for me, like I said, that 270 level looks very attractive right now. Once it does get above this, and all your moving averages on this chart here, they're lying on top of one another. We get this big move here today, right? These moves tend to really have some juice behind them. So I'm kind of excited about the natural gas situation right now. I do have to be patient as far as I'm concerned. You have to pick a spot where you believe something's going to happen. Yeah, maybe you get faked out a little bit here like you did in March. Personally, if you gave me 4 or 5 days in a row plus that last day, I'd be happy to take it anyway, because there'd be enough money in the futures that it wouldn't matter. But, at some point in time, this thing's going to take off. The question is will you be involved or not?
I mean, you just really have had genuine macro storylines out of Asia, genuine macro storylines out of Europe. You've had declining production, got a technical pattern that could trigger. It's the widowmaker for a reason, but there's just some interesting things going on in the world of commodities. While I don't chase tech, because whatever, nice thing about a trader, I got no shortage of options. Let's close off the report looking at Bitcoin. Because while there's a lot of interesting things going on in commodities, Bitcoin's like bull market, schmoll market, just kind of this meandering, messy mess right now. What do you make out of this technically and all that?
You know what? This is one area where I just don't have a lot, man. It's not acting like gold. Maybe to a small degree. There's not a lot of, for the tech space being as hot as it is, there's no interest in Bitcoin. There's no interest in this. I don't know, man. It's breaking a level here. It's breaking a pretty important resistance level here. I don't honestly have a good read on this, Mark. I really don't. This is an area where I think it's one of those things where I'm just sitting back and waiting to see what happens. Does it pull down to this next support level? Does it get above here? I don't want to play it here. I know that. If I'm playing it anyway, I've got to play it to the short side. Yeah, I'm just not sure. I thought with the tech, even with the AI, how is AI going to affect Bitcoin and whatever? It just doesn't seem there doesn't seem to be any interest here. Right? It's just,
and that's the thing. It's like a forgotten space right now.
It's as milquetoast as Powell was.
I mean, wheat is more interesting to me than Bitcoin. Like by a substantial. Natural gas more interesting. Crude oil certainly. Gold certainly, right?
Yeah.
All of that. Well, Greg, it's always a pleasure to have. Greg, you and I have so many things. I mean, we are commodity guys that are macro bears. And I think, once again, you and I do a pretty good job of providing a balanced approach. Wasn't a lot of our crabby bearishness in there. I think there's a lot of opportunities, a lot of different spaces. I really appreciate. Give me some final thoughts as we close up the show.
Yeah, you know what? I think we said it already, and I think it's very important. If you're getting involved here, okay, either be patient or make sure that you're taking very little risks. Because right now, and again, every trader should live their life this way. Look at the risk versus the rewards. Okay, so what's the risk here? Well, the risk is it's overbought, and we do have a V-shaped pullback, right? So not just a sideways meandering, but this thing actually V-shapes down. You could get crushed on that. How much more juice in an overbought condition does this have? Can it still go up? Absolutely. You can never argue with that. But does it have more upside as opposed to the potential downside? I think that's something you got to ask yourself when you get into that FOMO area, right? If you're like, oh man, I should have gotten tech 2 weeks ago. Well, you know what? There'll be another opportunity. I think you said this earlier as well, Mark. You've missed 4 million trades. The reality is there's 40 million trades out there to be had. Find the good ones, fire off on it, and let the chips fall where they may.
Yeah, indeed. Well said, sir. I agree with that 100%. Cash Flow Vikings, my trading lab at 7 p.m. Eastern tonight. I'm going to talk about my eighth inning strategy, which might tie into some of the things that you were just saying. And then Cash Flow Club at 8. And I think you're teaching Cash Flow Club tonight, aren't you, Greg?
That's me. I'm the trifecta today. Traders Lounge this morning, halftime report, Cash Flow Club. We're doing all things credit spreads today in the Cash Flow Club. So stop on by.
All right. Thank you for your time, Greg. Always appreciate your insight. And everyone, have a wonderful day. Don't forget to register for that day trading course coming up Monday. Special event, June 19th. And of course, as always, you can email me at Team of Tackle Trading if you need anything at all. Great show, Greg. Everyone have a wonderful day.
Thanks, Mark.